All right, buenos dias, my friends, or buenos tardes if you're on the East Coast. Hope everyone is having a great Saturday. Real quick, if you wouldn't mind, just let me know if you can hear me. I forgot to double check, or I didn't have the. I'm kind of running. I don't want to say running late, but anyway, I forgot to double check my audio before going live. So just let me know real quick if you can hear me in the chat, just so I know we're good to go. But okay. Sounds good. Yeah, Salvatore says, throwing us a big curveball on Saturday. I know. I'm so sorry that I had to reschedule our usual Friday night stream. Just holiday stuff, you know. Me and my lady went out, just went out and had some fun yesterday. So I wasn't around to stream, but I still wanted to get one in. So hopefully this works for everyone. I'm happy to see all you guys on this Saturday morning or Saturday afternoon, wherever you guys are. But let's see. Did you guys have a good 4th of July? Let me know in the chat if you guys had a good holiday for those of you here in the States. But what else, guys? Otherwise, I think we're going to have a fun stream. We'll hang out for the next hour and see where it goes. But I want to know a few things here in the live chat. Number one, this might be a little different just because it's like Saturday morning, you know, but let me know, number one. Well, that's actually number two. Number one, what did you buy this week? I want to know which stocks you added to your portfolio. I made some pretty big moves in the portfolio this week. I don't want to, I'm going to put out a full video on it tomorrow. So I'm not going to get into any of the details. You guys are just going to have to stay tuned for tomorrow. But so let me know what you bought this week. Number one. Number two, what are you sipping on today? What did you bring to drink to the Dividend happy hour? Me personally, I've got a cup of Joe. This is my second or third cup today. I got it here in my Starbucks mug. Let me see if it'll focus. You guys can check it out. One of my many Starbucks mugs. This is one of the Las Vegas ones. So, you know, I always gotta rep it. But also number three, let me know if anything cool happened in your guys' portfolio this week. Did you hit any new milestones in the portfolio? Maybe you finally got that 100th share of realty income, or maybe it was your largest SCHD dividend payment ever, because that came out earlier this week as well. So let me know if anything cool happened in your guys' portfolio. I'd love to hear about it. But let me go through the chat real quick and see who we got in the building this morning. Going all the way back to the top here, we got Kevin, Chris. Chris, dude, let me know. We were messaging on Instagram. Let me know if you ended up trying those chips. So, guys, a few days ago, I posted on my Instagram story a bag of the Better Goods, which is Walmart's new private label brand. We picked up some of their tortilla chips. So bomb, so good. So Chris said he was going to pick up a bag, but yeah, let me know, man. I know you bought a bag, but let me know if you ended up trying them. I think you said you were going to do it here on the stream, if I remember correctly. But yeah, what'd you think? We got Dorte S. S is in the building. Daryl's here. Good to see you, my friend. We got Kama here as well, sipping some coffee, and some nice pickups this week. Some Nike. I think that's going to be a popular one. Some Starbucks. I think probably another popular one. I will tell you guys this. I did add a little bit more to, did I buy Starbucks this week? I think I did. It was either Starbucks or Johnson & Johnson. I'm pretty sure I added a bit more to Starbucks, and also Broadcom. So really good buys. Anyway, we got Ingo here. Let's see, Salvatore. Did I already say what's up to Salvatore? Maybe I did. I don't remember. Big E is here. Good to see you, man. We got Nort Torres here. Good to see you. My man Zal's in the building. What's up, Zal? Hope you're doing good, man. John's here. Jeff's here. Shannon's here. Thank you guys all for tuning in. We got Tatomi. What's up, Tatomi? Lucas, what's up, man? And I'm sorry too. Once again, guys, I popped into the live stream chat last night just to see if anyone was commenting what was, you know, what's up with the stream? Why did he not go live, or, you know, whatever. There's always some confusion when we deviate from the normal schedule, which is understandable. But I just want to apologize once again for the inconvenience and for any confusion. I try and, you know, whenever I'm going to call an audible like that, I try and give as much notice as I can. I try and blast it out as many different places as I can. So I'll always put out a community post on Fridays, just announcing the live stream, whether it's the normal one or whether there's going to be some sort of change to it. And I always put it in the Discord group as well. So if you guys if there's any confusion about the live stream schedule or anything else, just, you can check those two places. Check the community tab on my channel, or just jump over to the Discord group and check out the announcements. Okay, Chris said the chips were good. Nice. That's awesome. I should have brought the bag in here with me to show you guys, but I don't remember what the flavor was. Chris, maybe you can share it, but they were really good. They kind of reminded me of Fritos a little bit. So Courtney's here. Coyote sunglasses. There you go. Burn Survivor. What's going on? Phil's here. What's up, Phil? Ingo. I think I said what's up to Ingo already. Fart Moni. There we go. All right. Alex is here. Tyler. What's up, Tyler? Oliver. Good to see you guys. Peter Raccoonsda. What's going on? Wow. Okay. Totomi's got a big vacation coming up, leaving for three weeks on Monday. Nice. Cool. Chris Prince Sinsuat. What's up, guys? Yeah, I see some more Nike buys for sure. What else? Yeah, DGI Crab with some nice buys here too. Nike, Hershey, Starbucks. Is MKC, what is that? That's not McCormick, is it? It is McCormick and Company. And McDonald's, nice. Sipping on coffee, not Starbucks though. Yeah, mine's not Starbucks. The coffee itself is not Starbucks, just the mug. The coffee is just like, the beans are just like Walmart Great Value brand beans. So love it. With a little bit of Walmart Great Value brand creamer as well. Let's see. There we go. Alex, been trying to catch a live for the longest time. Good morning. Yeah. Well, I'm happy to see you in here. And also, let me know too, if this is any of you guys, if this is your first time tuning into the Dividend Happy Hour. Typically, we do this on Friday nights. Typically, it's Friday night at 5 p.m. Pacific time, 8 p.m. Eastern time. But on some rare occasions, I'll call an audible. I'll have to switch it up. And that brings us to doing it this week on Saturday. Shamizzle's here. What's up, Shamir? Let's see. This is cool. John, a cool little milestone. Broke 70K in the portfolio, though most of that is from the Roth he started 5 years ago. That's okay. Good job. Let's see. S said, I finally got the portfolio past the 10,000 euro mark. That's awesome. Good job. That's awesome. 5 figures. Wow. Interesting. Oliver says, I hit a new all-time high of, there we go, of 8K and almost to $300 per year of annual dividend income. That's great. Good job. Let's see. Nice. Chris Kama here with another little milestone too. I rolled over 400K. Nice. Total of 400K in his portfolios across Roths, 401k, HSA, and taxable. Nice. Good job. Let's see. Alex, what do you got? What's the workout looking like today? I right before I streamed, I just finished getting my workout in. I hit a little shoulders and chest today. Just some dumbbell shoulder press, some lateral raises, and then I finished it off with just like a few sets of dips. Nothing too crazy. I mean, in total, I probably did 14, 15 sets somewhere in there. I've been jamming through my workouts though. They've been quick. I've been able to get in and out of there if I'm just lifting in like usually 40 minutes or less. So that's been nice. Let's see, Matt. Interesting. So loaded up on McDonald's, Coca-Cola, and started a Blue Owl position. Yeah, Blue Owl's seen a little pullback in this last month. I talked about it in my last video from Wednesday, but yeah, I think they were down something like 8.5% just in this last month, which is interesting because Main Street was up in this last month. So I'm not exactly sure what caused Blue Owl's drop. Maybe people just locking in some gains, taking some profits, but yeah, pretty substantial drop for them. So interesting. Kevin said Canadian Pacific had a train derailment yesterday, unfortunately. I wonder if we can jump over to Seeking Alpha and there's going to be anything interesting from that. So Canadian Pacific, is that just CP? Yeah, Canadian Pacific. Let's see what's going on here. No, there's no news. Huh. No news from this. Interesting. Maybe it'll just take some time, but it looks like the most recent news was from the 3rd, but had nothing to do with a train derailment. Sorry, guys. I hope you don't mind that. Those sips every once in a while, that little, a little slurp. Wow. Okay. So a couple pretty solid shopping sprees here. So Bloody Rose Yuki, first time live. Well, thanks for tuning in. I hope you enjoy the stream. Added to Johnson & Johnson, Starbucks, Realty Income, Visa, and looking to find a good ETF for tech stocks. Do you have any recommendations? Yeah, I mean, I think one of the more popular tech ones, I believe, is QQQ, right? So isn't that a more of a tech one? No, not really. Maybe you guys jump in and I mean, it certainly looks like it's based on these top 10 holdings. There's a lot of tech there. I mean, about 50% of the portfolio is just in tech here, or of the fund, excuse me, it's just in tech. So QQQ could be a good option for sure. But if you guys have any other recommendations, be sure to throw them in the chat here. SCHG might be another one, like very similar breakdown in the top 10, but QQQ might be, if you're looking more so for tech, QQQ looks like it has a slightly higher weighting, maybe by like a 1.5% or 2%, nothing too crazy compared to SCHG. But even VU, even if you just bought into the S&P 500, there's still some decent tech exposure, certainly not as much as those other two funds, 31.5% compared to 52%. But still, you can't go wrong investing in the S&P. So there's that for sure. But anyway, moving on, Jeff, also nice shopping spree here. Visa, Kraft Heinz, ExxonMobil, SHD, PCF, which I'm not familiar with. PCF is a high income securities fund. Okay. Interesting. What are these stats? Interesting, guys. Look at this. So 10.8% yield, pretty high yield, right? 5-year growth rate's 92%. So that's pretty interesting. I'm guessing there was a big jump somewhere in here. Yeah, I'm guessing it was right here. This is probably it. But otherwise, I don't know. We're seeing the dividend payments per share go down over time. So that's never a great sign. What's the total returns been for this bad boy? I'm just curious. Let's see. Let's look at the total returns compared to something like, let's add a few more in here. Let's add JEPI. Let's add JEPQ. Other people like something like SVOL as well. Let's just see what that all looks like. Make these comparisons here. So it looks like it's held up pretty well compared to all these, at least in the last year. If we zoom out across the last 3 years, looking at the total return, it's certainly underperformed compared to everything else here. What's interesting, in the last 3 years, JEPQ and both JEPQ and SVOL have outperformed the S&P over these last 3 years. Looking at the 5-year period, SVOL hasn't, it looks like both SVOL and JEPQ were not around 5 years ago. But yeah, looking at these three that were around, it looks like PCF has underperformed compared to JEPI, which JEPI hasn't been around for 5 years either. They were their inception was in 2020. Yeah. Interesting fund though. I don't know how I feel about this one. I'm whenever I see this type of dividend history, I just immediately want to like put this in the yield trap category. And I think for now, I'm sorry to do this, Jeff, but I think for now I'm going to add it to my list of certified yield traps. It's not as bad as some of the others, though. It's not as bad as something like Orchid Island Capital, for example. But you can see, pretty similar trend in the dividend payments. It's going down over time, albeit ORC has done so at a more aggressive rate. And then another one is Armor Residential REIT. That's another pretty clear yield trap, right? But this is probably, as far as declining dividend payments per share goes, this is probably the biggest perpetrator out of the bunch. So yeah, these last two, ORC and ARR, definitely are certified yield traps in my opinion. PCF, I'm lumping it in there too, although once again, it's not as drastic as these others. So This is cool, Tyler. Highlight was Vici dividend coming in at $70. That's a nice Vici payment. Good job. Great job. Great job. Okay. Okay, let's see. Wow, look at this. And I apologize, guys. I'm about 10 minutes behind in the chat, so I'm gonna just scan the chat here, and so I apologize if I jump over some of your guys' comments. Zal said this is really cool. SEHG paid a record $518. That's crazy. That's crazy. Bought a bunch of realty income from reinvested dividends. Reached wow, man, unreal. So just so everyone knows, you need to have about 381 shares of realty income to be making over $100 per month with that stock. Zal, good job, man. So, okay, so just from these two payments then, you're looking at over $600 just in the last month of passive income without having to lift a finger. That's crazy. It works, guys. You do this stuff long enough, and this is just what happens, So good job, Zal. That's very inspiring, man. Very motivating. Let's see. Keep going here. Nice. We got Kat here streaming in from the UK. Love it. It's usually 4 a.m. when you do these. I know. The Friday nights make it tough for some people, but I'm glad you got to tune into this one. Super excited to be here. Happy to have you here. Been adjusting my portfolio to have a stronger S&P position. Nice. Can't go wrong with that. Good stuff. Good stuff. I know. Tyler said Russ just did a Saturday stream too. Total coincidence. We did not coordinate that at all. Yeah, I popped in for the last few minutes of Russ's stream. I was watching it and listening to it as I was finishing up my workout there. So here we go. Dorte, cool little milestone, reached $1,000 in dividends this week. That's nice. So is that annual dividend income, or like just this week you brought in $1,000 of dividends? Both of which are very cool. So let us know what's going on. Alex here says, and this would be a good question, I think, for the group here. Still deciding on Vici or not? Any thoughts? Yeah, I really like Vici, but it's at the end of the day, only you can decide whether or not it's a good fit for your portfolio. So I guess with that, my question to you would be, what's keeping you on the fence about Vici? What do you think is the good? What do you think is the bad? Kind of what's in your mind, what's the holdup that's preventing you from starting a position? So let me know in the chat here. Maybe we can work through it that way. Yeah. As Al said, are you really drinking coffee if you don't slurp it? No, it's true. You gotta, and then you gotta do the exhale of satisfaction afterwards. Yeah, Salvatore says Visa is at a solid level. It is. Visa's seen a little bit of a pullback too. If we jump over, okay, to see what's cooking with Visa. Well, now they're 270, but they were, recently, guys, they were down to the low 260s, which was really nice. Really nice to see. I'm curious to know a couple things with Visa because I haven't looked for a while. So I want to see the forward yield in relation to the average. So it's a bit above average, nothing, not by a substantial margin. The 5-year average yield is 0.7%. So it's, 11.5% above that. Free cash flow yield's not super duper high either. You're only looking at a 3.8% free cash flow yield. You know what? Oh, I'm so sorry, guys. I don't know if you guys have looked at Snap-on lately, but Snap-on's looking very interesting. I was checking it out the other day, and the free cash flow yield for Snap-on right now, just looking at the forward, is 8.1%. That's pretty huge. So that's looking really good, I think. And Snap-on has seen a nice Nice little pullback too. We kind of talked about that, I think, in the most recent dividend income video. But in the last month, they're down 4.4%. Year to date, they're down 11.6%, right there at their 52-week low. Yeah, I think Snap-on's starting to look pretty good. It's still quite a bit above my cost basis. I think my average cost with Snap-on is $212 per share, somewhere in that range, like 210, low two teens. So it's still quite a bit above, but I don't mind this pullback. Even so, I think even with it, I think Snap-on could be a pretty nice buy right now. But we'll see. If I'd prefer to see it. Obviously, you'd prefer to see it lower, right? I think it's interesting right here. Me personally, I would probably consider adding to it again if it gets down into the mid 240s or the low 240s. That's kind of the point I'm looking for when it comes to adding more to Snap-on. So we'll see if it gets down there. It's certainly headed in that direction. But anyway, PE ratio is looking pretty low too, 13.36, which is, about 8.4% below the 5-year average. So yeah, looking good. Looking good. Snap-on. Price to free cash flow is even lower than the PE ratio, which is interesting to see. So yeah, Snap-on's looking good, I think. Okay, let's keep going. Yeah, I see you guys I see you now throwing out some other good tech ETFs. So thank you guys for doing that. We've come up with looks like IYW and QQQ. We've got VGT, QQQM, XLK. Yeah. Let's see, VIT. Okay, there you go. So good options there. This is a tough question to answer. How do you determine what is a good number of shares to hold with so many different stocks out there? How do you determine what's a good number of shares to hold? So are you asking about, I just want to make sure I'm answering the right question here. Are you saying, how do you determine what's a good number of different stocks to own? Is that what you mean by this question, Salvatore? Let me know in the chat if that's what you mean, or if it's more, how do you determine how many shares of a stock you should own? Let me know if you wouldn't mind clarifying for me. That would be helpful. I'd appreciate that. All right, let's keep going. This is a great question. I'm actually going to screenshot this. This would be good. This would be good for a Q&A video. Or just I could probably do a full-on video on this too, even. So if you had to pick only 3 stocks or ETFs to hold for the next decade, what would you choose and why? So let's make it fun. Let's just stick to individual stocks, no ETFs. Because ETFs is easy. It's too easy. But for individual stocks, the first name that comes to mind for me is Visa, for sure. If the stock market closed for the next decade, if I couldn't touch my stocks, I would feel totally secure owning Visa. It is a growth monster. Okay, the financials are just perfect. The balance sheet is pristine. Visa's not, and just what they do and how they make their money is only becoming more and more in demand. So I feel incredibly confident about holding Visa for the next decade. Yeah, that's definitely one of them. I'd say Realty Income's definitely on there as well. As far as real estate goes, it doesn't get any more like steady and stable as Realty Income. So once again, if the stock market closed for the next 10 years, I feel like I could count on Realty Income to still be there when things open back up again. And I would imagine their occupancy rate would still be over like 95% easily. So well, hopefully, anything could happen in 10 years. That's a long time, but I'd feel good about owning Realty Income for the next decade. And with that too, just how I'm approaching these stocks is less about which ones do I think are going to have the best returns over the next decade, because I don't really know. It's more so which ones would I do I feel like are going to be the safest holds that I don't have to worry about if I couldn't touch my stocks for the next decade? If I had to hold, if I couldn't touch things, if I couldn't make any changes, I want ones that I can rely on and count on and that are going to be the most sleep well at night stocks. So those would definitely be two for me. Excuse me. And there really are so many good options out there. Like, one that I don't own is Pepsi. I think I would feel good about holding that one for the next decade as well. McDonald's is another one. Starbucks is another one. But if I had to just pick one, if I could only pick one more, it would probably be, let me look. I want to pick one that I own. So far we have Visa, Realty Income, and yeah, I would say Procter and Gamble. Soap, laundry detergent, shampoo, deodorant, razors, toothpaste, toothbrushes, toilet paper, diapers, paper towels. Yeah, I'd feel good about Procter and Gamble. So probably those three, but there's still so many more out there that are good buy and hold forever stocks. You know what I mean? So, and I'm actually looking at my holdings right now, and there's actually not one that I wouldn't feel good about holding for the next 10 years. If I couldn't touch any of these holdings for some reason, if I couldn't touch any of these holdings for the next 10 years, all the ones that I'm looking at right now, I feel good about. So, there we go, guys. Okay. So we're back to more, more records in the portfolios. Darren, $184 SHD dividend. That's crazy. Unreal. Big E, 175.53 from SCHD. That is crazy too. Cat, biggest month of dividends ever, 260 pounds or $340 in the United States. That's unreal. That is really unreal. Good job. Ingo, crazy month of dividends as well. 478 from SCHD, 280 from TSOY. I'm not going to get into TSOY, but great month of dividends for you, Ingo. Good job. So, and then Wacho, did I get it? I don't know. I know you gave me the enunciation last week, and I apologize. $120 basically for the month, highest of the month. So that's awesome. Daryl as well, $415 from Beachy Properties. That's great. Ooh, this is another good question. Okay, I'm going to screenshot this as well. Okay, if you had 100K, what would you buy for growth and nice dividend income? So I want to, gosh, if it's an ETF portfolio and I wanted a mixture of growth and income, I would say SCHD would be in there. I would say something like maybe SCHG. You could probably rock with both of those and really get the best of both worlds. And if you wanted a third fund in there, maybe throw in like VTI or the S&P 500. So that's a pretty standard like 3 fund portfolio. You've got like a foundational ETFs that gives you that broad exposure. You've got a nice dividend growth fund, SHD, and then you've got like a more growthy type fund that kind of gives you the trifecta. So I think that would be a good way to go. But if I had just to pick one stock for growth and dividend income, it'd be Visa. Let's go with 3, Let's go with 3. I think Visa's up. Visa would definitely have to be on there. For me, guys, Visa is just the gold standard. Microsoft is another great option. Evaluation aside, I think Broadcom's a pretty solid option as well. Valuation aside, once again, Rollins. I love Rollins. Williams Sonoma, great growth stock as well. Let's jump over here to, so I think some of the ones on this list right here, if it'll load, my Seeking Alpha's been doing this lately on this computer. I don't know why. It just won't load. It'll stay at this screen. It only happens here on this one. It doesn't do it on my iMac. It doesn't do it on my MacBook. It doesn't do it on my phone or my iPad. It just on this right here. So I don't think it's going to load. I'll leave it open just in case it does, but I don't know why that's been happening. Let's see. Yeah, Camus says Snap-on's on the buy list. Tortoise investing, same. Daryl here says he posted a video a few days ago with his thoughts on Vici. I saw that you posted about that in the Discord group, actually, Daryl, and I have it saved to my watch later playlist on YouTube. I haven't checked it out yet, but I'm really interested to get your thoughts on it. And by the way, guys, if you're not already in the Discord group, please join. I think you guys will really like it. It's free to join. And there's a link to it in the description of the video. You just click the link, it'll take you right there. But essentially, this Discord group, which is called the Drip and Sip Discord group, it's just a big group chat with tons of investors talking stocks and, you know, sharing their ideas and opinions on stocks and their portfolios and dividend income and all that good stuff, and also just general gibberish. But at this point, there's over 3,000. Actually, I think there's over 3,100 investors right now in the group. So it's a really great place to be. And like I said, it's free to join. There's a lot of good stuff getting passed around in there. So you guys definitely check that out. There's a link once again in the description to the Discord group. So, and check out Daryl's channel as well. Go check out his Vici video. Let's see. Ooh, Kevin says, Ryan, we need to know your next new stock position. These are all great, great options. Also, guys, I think Seeking Alpha is about to load. It's doing something over here. Yum Brands, Vici Properties, PKG. Yeah, those are all great. Those are all great. I would say at this point, if I had to add another restaurant stock, which I don't know if I want to, because I'm pretty happy with Starbucks. I really like Yum Brands. It's definitely like one of the bigger contenders for me. I think McDonald's is really solid as well. It would probably be between those two. I mean, you guys know I've been wanting to add Vici for a while now. PKG is another great stock, Packaging Corporation of America. Rollins would definitely be on like at the top of my list of next stocks to add. What else? I know I'm missing one in there. Old Dominion's been kind of interesting to me, but I don't know. I would sooner add a Rollins before I add Old Dominion. I like L'Oreal a lot. That's on this list that I'm trying to show you guys. I added LVMH to that list recently too. That's another great consumer brand. But and I will say, just I don't want to spoil anything, but I actually did add a new position to the portfolio. That's what I'm going to be talking about in tomorrow's video. So I shared this earlier in the stream, but I made some really big changes to the portfolio this week. And if you guys have seen these changes, if you follow me on Blossom, you can see them because it updates automatically. Please don't spoil it in the chat here. If you follow me on Blossom, if you want to see those changes, go download Blossom. There's a link to that in the description and follow me there. You can see what I did in the portfolio, but I'm going to be sharing everything in a video tomorrow. So I'll share all the moves, but yeah, it was a pretty big week. So yeah, this is a good question. So Matt here says, I'm not sure if I've ever heard you talk about calculating the intrinsic value of stocks in your videos or weekly newsletters. Do you have any recommendations for calculating it? Yeah, there's a few different things that I look at when it comes to valuing stocks. And I think one of the best ways to explain this is let me pull up my Investor's Almanac. So let's jump over here to the screen. So guys, this is I'm sure you guys have seen this tool before. It used to be called the Dividend Database. It's now called the Investor's Almanac. And these last couple of weeks, I've been making a lot of changes, and I don't want to say I've revamped this almanac or the almanac, but I've made a lot of changes to it these last couple of weeks because I'm now actively taking steps and working on rolling out this almanac template so you guys can have this tool for yourself, and also so you can have access to my own personal Investor's Almanac, which will give you access to all my stock database, all of my book notes, my journal right here, which pretty much at this point is just me going through different collections of works. Like I'm going through all the Berkshire Hathaway annual shareholder letters. After this, I'm going to go through the Howard Marks memos. I think after that, just for fun, I might end up taking my Series 65 exam and get my license for that, just for fun, just to have it. You don't need a 4-year degree for that, and it'd be I think it'd be a really good learning experience for me. And then also, these are some other collections as well. Then I have some other like one-off article ideas that I want to write about that I keep in the journal. But anyway, whenever I'm finished with putting all this together, I'm going to roll all of this out to you guys. You'll have access to this. You'll have access to the template for yourselves. So you can use this to do your own stock research and book notes and all that stuff as well. So if we go over here to the stock database, let's just go into the template, for example. So looking at the valuation, these are the different things that I look at when it comes to valuation. So one of the things I look at, and we just saw this with Snap-on, is the free cash flow yield. And I have a little blurb here about the free cash flow yield. So, and I got this from reading the book Investing for Growth by Terry Smith. And I can actually pull up the quote right here. So let's go to book notes. We're going to go to Investing for Growth. Memorable quotes here. And where is it? Here it is. So a quote from the book on page 87, we seek to buy our portfolio companies when their free cash flow yield, which is the free cash flow per share, basically divided by the current share price, is at or above the yield we would expect to get on long-term government bonds in the same currency. Then he adds to that, please note, not the current yield on bonds, which in most cases has been depressed by governments buying their own bonds, but the yield we think might apply if this were to stop and all bonds had to be sold to third-party investors. Our starting guess for the yield that might then be required is 1% over the expected rate of inflation. If we buy shares with free cash flow yields higher than that, and which will grow, unlike the coupon on bonds, we should have captured some value. So the reason that they look for free cash flow yield that's 1% over the rate of inflation is that 1% is like the risk premium that they add to that. So, and if we go back over here to the template, looking at the free cash flow yield, you can actually find the expected rate of inflation in the template. I have it linked. So it'll take us to this page right here. So the 10-year expected rate of inflation is 2.37%. So we might look to buy based on the free cash flow yield, if that's the valuation metric that we want to use. We might look for a stock whose free cash flow yield is 3.37% or above. And as we saw with Snap-on, actually, see, now Seeking Alpha is just not even going to load at all. Whatever. That's kind of frustrating. I don't know why it just keeps happening on this. I have no clue. But anyway, long story short, that's the free cash flow yield. That's one of the things. And it doesn't necessarily assign I guess it can. I guess it can assign a set dollar to, is it going to load now? No. A set dollar to dollar value based on this too, because you would just divide the how would it work? So you would free cash flow yield equals free cash flow per share divided by current share price. So you would basically divide the free cash flow per share by the desired free cash flow yield. So like if the sorry guys, I'm losing myself here. I'm trying to figure this out. So if the desired free cash flow yield is 3.37%, then you would just divide whatever that company's free cash flow per share is by the 3.37%, and that would give you the share price that you might want to look for based on that free cash flow yield. So hopefully that makes sense. Took me a minute to get there, but that's how you could go about doing it. The second is the discounted cash flow calculation. This is one of the most popular, definitely one of the most popular ways to value a stock. Valuing it based on what it's the discounted rate of its current free cash flow, or if its future free cash flows, excuse me. And I found a really cool free tool that you can use to do exactly this. This is profitviz.com. Let's do Visa, for example. Actually, no, let's do Snap-on. We've been talking about Snap-on, so not Snap, Snap-on. So if we go over here, go over to the calculator, okay? And this isn't, well, there it goes. So maybe we can jump back over here now and plug some of these numbers in. So there are a few different valuation metrics you can do. So if we're going to do a discounted cash flow, we'll use that as the valuation metric. So according to this, Snap-on's 5-year average free cash flow growth is 13%. But let's be a bit more conservative and say, if we go over here, let's say, what's the 3-year free cash flow growth? It's not been great. According to Seeking Alpha, the 5-year has been 10%. So I think 8% is probably pretty reasonable. Probably pretty conservative estimate moving forward. Shares growth. This is the shares outstanding. So we can leave that. Let's just put the 5-year average 0.8% there. Let's say the current price to free cash flow is 11.3. Let's say that it's closer to the 5-year average upon selling. Let's say it's going to be 13.5, for example, let's just say. So we'll go 13.5. Target rate of return, we'll leave it at 10% for now. And so, but anyway, based on these inputs, it would tell us that based on this discounted free cash flow calculation, the fair value of Snap-on would be $283, which means that it's about 10.7% undervalued based on that. Now, with that, you can adjust these inputs and say if you want a higher target rate of return, you'd want to, let's say you want 12%, you could buy it at $260 per share, and it would be still a little bit undervalued. With a 13% target rate of return, it maybe is a little bit overvalued. And I was talking about maybe wanting it in the mid to low 240s. So that would give us 244 with a 13.5% target rate of return. So this is one thing that you can use to do a discounted cash flow calculation. And then last but not least is analyst valuation. So I look at things like Morningstar to see what their fair value is, and I get access to Morningstar, their reports through Charles Schwab, which is great. You can also go over to alphaspread.com to see what their intrinsic value is, and you can search like a few free ones every single month. But you can see that they give you a base case, about 260 per share. So it'd be just slightly undervalued based on this base case. Worst case, 211, which means it's still overvalued by 17%. Best case, 332, which means it's pretty significantly undervalued. So that's another great resource for valuation. And then Seeking Alpha as well. I always like to go and see what the analysts have for the upside. So if you go over to the ratings tab and you go over to Wall Street Analyst Ratings, and you have to have Seeking Alpha Premium to be able to access this. But the analysts will give a price target right here. So according to this, the average price target is 289, which means it's about 13.3% undervalued based on that. So yeah, those are all the different ways that I go about doing valuation. And it's not a perfect science, but I think it gives me a pretty broad idea, or it helps me establish a sort of range I should be looking in based on various valuation methods. And I'll also look at things like, where's the dividend yield at in relation to the 5-year average? Where's the, PE ratio and the price to cash flow in relation to the 5-year average? I'll look at those relative valuations as well and see where things are at. So really good question. Sorry, I did not mean to go off on a super long tangent with that either. I'm quite behind. So let's see. Okay, so going back to Salvatore's question from earlier, how many shares should you own before you get into another position? I don't know if there's exactly a set amount of shares. There's not a definitive amount that you should own. It just kind of goes back to where you think the best opportunities are. And sometimes, a multitude of opportunities can hit you in the face at one time, which is exciting, but it's also overwhelming. So you have to gauge the best way to allocate your contributions, especially if, most of us have pretty, we can only invest a certain amount. Obviously, all of us can only invest a certain amount. And sometimes it's hard to buy all the different things that you want to, but you just have to weigh those opportunities and see where you think the best opportunities are going to be. But there's not a set number of shares that you should own. It's before you get into another position. You don't have to say, okay, I'm going to get to, 10 shares of stock XYZ before I buy another one. You can approach it that way, and that will, give you a goal to work towards for sure. Like, there's some people who shoot to they'll just focus on one stock, and they'll work every single week on getting to 100 shares of that stock before they move on to the next one. You can definitely approach it that way. That's what Russ did with Pepsi. I think that's what Ari did with Johnson & Johnson as well. And I think there might be another stock that he did that with. I don't think Realty Income, but I think Johnson & Johnson was one of them. And, that could be a good way to go too. If you find it can keep you from, I guess, spreading yourself too thin. And it can keep you focused as well. So I don't know. It really is a tough question to answer because there is not a definitive answer for it. But don't feel like you need to have X number of shares of a stock before you add another position. It really all boils down to what you think the best use of your contributions and your reinvested dividends are. So I know that's a very not solid answer, but it's kind of the best one I have. This is a great question. So Hagen said, and welcome to Vegas. That's awesome. How do you like living here so far? And where'd you move from? I'm curious to know. But any cool places to visit in Vegas? I just moved out here. So you got to go to Juan's Flame and Fajitas. Definitely go to Juan's Flame and Fajitas. Really good Mexican food. Where else is really cool to visit? Really good Italian place called Bootleggers. Kind of near South. I think it's kind of near South Point. That's a really cool spot. I always like visiting downtown Summerlin. I was there a couple days ago. Downtown Summerlin's really cool shopping. A lot of good restaurants there as well. What else? There's one other place I wanted to mention. Another shopping place, I think. I don't remember. You got to go to the Peppermill. The Peppermill's down on the strip, but it's an iconic spot. Definitely hit up Peppermill. What else? Oh gosh, there's so many good places in Vegas. Yeah, downtown Summerlin's really cool. I'd recommend checking that out. They have a really cool farmers market every Saturday as well. I'll keep thinking of places, but no. Let's see. Let's see here. Okay, you guys are talking about clearing your cookies and stuff like that. Okay, I can try that. I will try that. Let's see. Wow, this is cool. Alex said, first time seeing you live. I just hit 100K in the portfolio this week. That's incredible. That's a really cool milestone. Good for you, Alex. Great job. Great job, my friend. How long had you been investing before you were able to reach the 6-figure mark? I'm curious to know. Curious to know. There we go. This is awesome. Reese, currently at work watching right now. 20 years old, work part-time at a golf course. Plan to put in $100 every week into the market. That's a fantastic plan. Good job. That will definitely do you right over a long period of time. So this is a good question too. Do you think placing money in placing money in a money market account while dividend investing is a good idea. Yeah, I don't think it's a bad idea. I don't think it's a bad idea at all. If you have some cash that you don't yet want to invest, like maybe you're setting some cash aside because you want to wait for, you're going to build up some ammunition just in case a really good buying opportunity comes along. I think a money market account is a good place to store that. Or if you just have, you're building up not a money market account, but if you're building up like an emergency fund or some rainy day money, or you're saving for something particular, maybe like a down payment on a house or a vacation or something like that. I think some sort of higher interest paying account, like just a high yield savings account, would be a good thing to do as well. I have a decent chunk of change in a high yield savings account, and at this point, it's bringing in over an extra $100 a month just from the interest, which is really freaking cool. But that's money that I plan to use on a down payment for a house. So it's not something I'm going to have forever. But in the meantime, it's been cool to generate that extra passive income. So yeah, I think it can be a good idea to do that. Okay, I think this is some. How do I remove this? This is definitely like some sort of spam or something. So I'll get rid of that. Yeah, I live in Summerlin. Downtown is cool. Nice. Moved from Europe. That's awesome. Yeah, so if you're in Summerlin, you're probably not too far from me. That's cool. Very, very cool. And it looks like I'm all caught up in the chat here, guys. Let me scroll up and see if I jumped over anything here. Tanner here says, what do you think about Meta and Google? Been holding before they started paying dividends. I think both are very solid companies. Yeah, I think Meta has a dangerously tight grip. I shouldn't say dangerously, but an extremely strong grip on their customer base, or their users. Obviously, people are addicted to social media and spend just obscene amounts of time in their phones, and so they certainly have a strong hold on the people that use their products and their platforms. And I would say Google's the same way. Google is just a beast. I think it's a really good looking company, and I'm stoked to see both of them pay dividends. I think they both have the makings to be really great dividend growth stocks. I think with both of those, we'll definitely see double-digit dividend growth rates. I'd be surprised if we didn't see double-digit dividend growth rates. And I would honestly be surprised if their 5-year growth rates weren't, when they get to this point. I would be surprised if it wasn't going to be over 20%. I think they have all the makings to be able to afford that. So we'll see what they do with the dividend growth, but I think they could be really great dividend growth stocks for sure. This is a really good question. So how much percentage of your take-home pay would you suggest to someone to invest? Should it be 20%, or what's the number? I don't think there is really a magic number. I think in general, like the more that you can invest, the merrier, but it really comes down to what you're comfortable with. And just what your monthly expenses look like. I would, in general, just invest the amount that you're comfortable with. That and starting out, if you're someone who's newer to investing, I would start slower. Like start with a lower amount just to get your feet wet and build up a tolerance for the daily fluctuations of the market. And then once you find your groove and feel more confident with what you're doing, I think from there it makes sense to then increase your contributions if you can afford it. But that's the thing. It really comes down to just what you can afford. General rule of thumb, the more the merrier, but do an amount that is reasonable. Like I think you need to have balance. You know what I mean? So I me personally wouldn't completely live like a hermit and just cut out every single, well, how do I say this? I guess what I'm trying to say is I would figure out what an amount is that allows you to meet your long-term investment goals while also still allows you to live life and live a well-balanced life. I do think that's important. And I think approaching it from that perspective will help you sustain um, your investments over a long period of time. And I think it won't make the process seem as um, uh, I don't think it'll make the process seem as grueling. Maybe I don't know. I don't even know if that makes sense. But 20% is a good number to shoot for if you wanted a percentage. But like I said, just the more the merrier. Like for me personally, how I approach it is, I I invest a set amount every single week. I invest in total between my two accounts $230 every single week. I started out investing a lot lower, 25 bucks a week, and then over time I've increased that. But this amount for me is not enough that I feel that I'm not able to continue saving and building up my emergency fund. It still allows me to pay all of my bills and expenses. Um, while still once again being able to build like a sort of cushion safety net emergency fund type of thing. So for me, I feel like I've established a pretty good balance, and I'd like to invest more than I am. And at some point I will increase my contributions, but it's important for me to, number one, make sure all the bills are paid, obviously. And number two, um, make sure I'm able to save for other things outside of investing, like down payment for a house. I have a vacation fund. Um, have a little bit of fun money and stuff like that. So for me, it's just all about having that balance. And so whatever that looks like for you, I think that's it becomes a very personal thing at that point. So just whatever you can do personally without feeling like you're just like stretching yourself too thin just to put money into your the most amount of money you can into your account, if that makes sense. Probably a really weird way to answer it. I apologize, but that's kind of my take. Um, Let's see. Yeah, that'd be cool. We'll have to get together for Juan's or something like that. Maybe I'll take you to Juan's Flamin' Fajitas. But yeah, shoot me an email sometime. Um, my email's just ryan@retirewithryan.com. I don't know. I don't know. But anyway, shoot me an email. Maybe we can set something up. That'd be cool. Yeah, DGI crab. And by the way, guys, we're about to wrap it up here in just a couple minutes. But I quit Facebook. Best decision I made. Social media besides YouTube is so toxic. I am kind of the same way. I've actually never really done anything on Facebook. I've had like a Facebook account. I don't think I've ever posted on there. I've never been an active user of Facebook. Instagram, yeah. I've tried being on Twitter a couple different times. Like I've tried consistently posting over there, but I just really don't like it. I really do not like using that platform. Instagram, I don't even particularly enjoy anymore. Um, I do think I do have TikTok and I post on TikTok. So the same, all my YouTube shorts, I also post on Instagram and I also post on TikTok as well. So that's really the only reason why I have those. But I do find myself getting sucked into TikTok from time to time, and I hate it. As soon as I catch myself doing it, I just like shut it off. So I've with just when it comes to work and stuff throughout the day, I really try and make an effort now to like not even have my phone in the same room. If it's within arm's length, it can become a distraction. So typically, like I'll just set my phone in the other room as I'm working or stuff like that, and it's been a really really big help. So. But yeah, YouTube is still YouTube is the GOAT in my opinion. Certainly biased, but I've learned so much from watching YouTube videos, and YouTube has given me so much, and it's just the community here is really solid as well. So I think it has a lot to offer for creators and also those who consume the content, because it's more long form. You can get more out of it. It's not just it's not just 30-second or a minute clips or stuff like that. So anyway, guys, I think, yeah, YouTube shorts be addicting for sure. School of YouTube. I know. You know what though? Like I feel like there's been so many things throughout the years I've learned from YouTube. It's helped me learn video editing. It's helped me learn how to play guitar, how to play piano. It's helped me learn how to build websites. It's helped me learn which camera equipment to buy and how to use cameras. Um, there's just so many. It's helped me learn about investing and dividend investing. So anyway, yeah, guys, I think this is a pretty good place to wrap it up. We've gone about an hour now. So yeah, Zal says, I didn't know you played any instruments. Can't wait to hear it. I always have my guitar right here. I've always been hesitant to pull it out and it's not in tune, but yeah, I always have it right there. I'm so on and off with it too. Like I'll go through phases where I'll play guitar just incessantly for like a few months at a time, and I get really good, really build up my skill set, and then I fall off, and then I won't touch it for like I probably haven't touched my guitar. Besides then, I haven't touched it for probably like maybe even like 4 or 5 months. So, but yeah. Anyway, guys, yeah, we are wrapping it up here. But thank you guys so much for hanging out with me this Saturday. I'm sorry once again we had to reschedule our stream, but we had a good turnout for a Saturday morning. So I appreciate I appreciate you guys spending the time with me today. I hope you all have a fantastic weekend. Thank you guys for the tech support with Seeking Alpha there. I'm going to clear my cookies here, so hopefully I don't have that run into that issue again. But yeah, thank you guys for everything. I really appreciate you all. And definitely tune into tomorrow's video. Like I said, it's going to be, big changes in the portfolio this week. I'm going to reveal it all in the video going out tomorrow morning, bright and early, 7 a.m. Pacific time, 10 a.m. Eastern time. So definitely tune into that. And when you do, let me know your thoughts on these moves as well. I think I don't understand this comment. Sorry, I just got distracted. I talk about food companies all the time. I talk about Starbucks all the time. I briefly mentioned McDonald's, and I don't really know where this comment's coming from, to be honest with you. But anyway, guys, we're gonna wrap it up there. You guys all have a fantastic weekend and a great day, and I will see you in the next one. Take care.